In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, trade tensions rise. President Trump says he will impose a new 10% tariffs on $300 billion in Chinese imports starting next month. This in addition to the 25% tariffs already imposed on other Chinese goods. U.S. stocks tumble. Could iPhone and other prices rise as a result? Plus, the acquisition inquisition. More details emerge about the U.S. Federal Trade Commission's antitrust probe into Facebook, looking squarely at the social network's buys. And cloud wars. A new U.S. Defense Secretary, Mark Esper, says he'll review the Pentagon's $10 billion cloud contract over concerns Amazon is getting an unfair advantage. This following President Trump's criticisms after hearing complaints by number 2 contender Microsoft and now eliminated Oracle. But first to our top story, President Trump abruptly escalated his trade war with China Thursday, tweeting, quote, during the talks, the U.S. will start on September 1st, putting a small additional tariff of 10% on the remaining $300 billion of goods and products coming from China into our country. This does not include the $250 billion already tariffed at 25%. This after failing to come to an agreement in the most recent round of talks in Shanghai. Tech stocks, including Apple, plunged on the news. A draft list of the targets published by the Trump administration in May included a raft of consumer and tech goods, including most of Apple's major products. Earlier, Trump was asked if he's concerned about the market reaction. Take a listen to what he had to say.
No, I'm not concerned about that at all. I expected that a little bit because people don't understand quite yet about what's happened.
To discuss, we are joined by our Bloomberg trade reporter, Sarah McGregor, also with us, Bloomberg Business Week's Max Chafkin. So, Max, what do you think he thinks people just don't understand?
Well, I think the sort of theory from the Trump administration is, number one, this is a temporary thing that, this is all part of a negotiation with China. It's the art of the deal, and that I think, basically Trump supporters agree with that. And then the other piece of this is that, these American companies can adapt. I mean, the reason you don't see Apple stock, tanking right now is because Apple uses contract manufacturing, and in the long run, they could, shift manufacturing out of China if they needed to. Obviously, that would be a pretty big lift for them and a bit of a near-term disaster.
So, Sarah, as usual, there's some ambiguity on the length of time this would be imposed. The president indicating they could go up or down, be short or long-term. Give us the details.
So Trump later, when he spoke with reporters after he announced the 10% tariff in a tweet, said, it could even go well beyond 25% if he had to go there. So again, this just creates a whole new world of uncertainty for the business community. And I think, companies like Apple, for instance, this is a 10% tariff that Trump announced today. When they first sort of announced this $300 billion, the possibility of tariffs on this final batch of imports from China, the rate was 25% that was proposed. So 10% isn't quite there yet. But still, this is the part of China's imports that will hit consumers. And so even a 10% tariff, if a company can't sort of eat that up, it's going to be passed on to the consumer, and everything from children's clothes to toys to, again, your iPhone, that this raises the possibility of those prices going up.
Now, thus far, Apple goods like the Apple Watch, AirPods, those haven't been tariffed, Max. So how do companies deal with this uncertainty? Sarah and I were talking yesterday, and she indicated it's increasingly looking like there is not going to be a short-term resolution.
Well, I think you're seeing companies talking more and more about manufacturing outside of China. I mean, India, manufacturing in India or some other country would be a possibility. Of course, the entire sort of high-end manufacturing ecosystem for consumer electronics is in China right now. The other thing is they could raise prices, as Sarah says. Part of the problem is, though, that already the iPhone is kind of under pressure from consumers. Consumers have been sort of hesitant to upgrade. The upgrade cycles are getting longer, and you wonder if you start raising prices even a little bit, that could change the sort of economics for Apple.
So, Sarah, how has the Trump administration thus far decided which products to and which products to not tariff?
Well, it does seem that they've come under a little bit of pressure from people like Tim Cook. There were some Apple products on previous tariff lists, if you remember, that were left off ultimately, that they were able to successfully lobby to get those products off. And on this $300 billion, there's been a public comment period, and that draft list is still that, just a draft list. So the Trump administration will need to come out with that final list, and I think that's where the big question is right now. I'm sure there's a scramble of lobbyists in Washington right now getting their paperwork in order, trying to hit the White House and get a meeting there to try and convince Trump to leave their products off the list. So that'll be an interesting thing to see develop over the next few weeks before this 10% tariff takes effect.
And before the next round of talks, also starting in September. Okay, Bloomberg's Sarah McGregor and Max Chafkin, thank you both. Now to Pinterest, shares jumping as much as 17% in extended trading. The digital scrapbooking company reporting better than projected revenue and user growth for the second quarter and boosting its forecast for the year. Second quarter revenue jumped 62% to $261.2 million, better than analysts estimated. Pinterest attributed the revenue gains to international and U.S. growth and said the business was positively impacted by the later timing of Easter. Coming up, investigating Facebook. The government is turning up the antitrust scrutiny on the social network and exploring if it is buying up companies to keep the competition down. That's next. This is Bloomberg. Further details emerging about the U.S. Federal Trade Commission's antitrust probe into Facebook. Investigators are trying to determine whether the social network's purchases of companies like Instagram and WhatsApp were done with the intent to keep them from threatening Facebook. To discuss, joining us from Oakland via Skype is Ashkan Soltani, former CTO of the FTC. And here in the studio, we've got Bloomberg Tech's Kurt Wagner, who, of course, covers Facebook for us. So, Kurt, what exactly do we know about the FTC's lines of inquiry here pertaining to acquisitions?
So they are going to be looking at all of the acquisitions Facebook's made, or at least some of them. And there's many, there's dozens. And we only know some of the big ones, of course. There's Instagram, WhatsApp, Oculus, those get all the attention. There are many other smaller acquisitions. And what we're starting to hear is that they're going to be reaching out to, people who were involved in those deals to try and get a sense for, did Facebook make these purchases, these acquisitions for the right reasons? And right now, that's really kind of the new element that has come up in the last, couple hours.
Now, Facebook, as you mentioned, they've acquired 90 companies over the last 15 years. Ashkan, the FTC is reportedly concerned about Facebook's attempt to thwart the competition or buy companies that would threaten Facebook's own app. I don't understand. Isn't a company buying another company one of the primary reasons that companies do that is because they're going to be competition, right?
Right. And so the FTC, as you know, launched in June this technology task force to investigate and look at antitrust matters, including acquisitions. One of the things to think about, that group is stocked mostly from people from the mergers portion of the FTC, from the mergers division. And so they're going to be looking at whether these acquisitions were done in a way that kind of harms competition in the market or is anti-competitive in any way.
So were you there when the FTC approved the acquisition of Instagram and WhatsApp? Because there is some reporting that the acquisition of Instagram, at least, brought some discomfort to the commission. They weren't quite comfortable with it, but also didn't think that they could necessarily win if they challenged it.
I wasn't involved in that matter, and I don't believe I was there during that decision. The thing to think about is a lot of the decisions or a lot of the considerations are, for example, around the definition of the market these companies occupy. So WhatsApp was a messaging or communications app, whereas Facebook could have been seen as a social networking app. If you think of them as data acquisition apps for the purpose of advertising, then your analysis differs. And I think people are coming around to the perception that it's not just about the sector you occupy, but it's the fact that you combine the data across these sectors to further advertising goals or to further kind of data collection goals.
Now, Kurt, there are some other companies in question here. For example, a company called Onavo Mobile, which is a company many of us might not have heard of. Facebook used their behavior tracking technology to target companies that would make good acquisitions. Tell us about that.
Onavo was an app that people would kind of download on their phone. It offered a VPN, a virtual private network, and what it basically did was it routed internet activity through Facebook, and so Facebook could kind of see, what apps were people downloading to their phone, what websites were they visiting, that kind of thing. It gives them a sense of what is popular, what's kind of growing. It's a way to, kind of spy on the competition a little bit without maybe spying on the competition. And we've been told repeatedly, this is not really a surprise or a secret, that Facebook used that data to, figure out what is the up-and-coming app of the moment, where should we be paying attention, and, who should we potentially try to acquire.
Now, Ashkan, many of the people who worked at these companies still work at Facebook. Obviously, the founders of Instagram and WhatsApp have left, but these companies are deeply embedded in Facebook and Facebook's culture. What would the remedies be if the FTC determined that there was an antitrust issue here?
Right. I mean, so there are many remedies. I know a lot of people jump to things like breaking up the company. It's currently a topic of the political debate in the upcoming election, the 2020 election. The thing to think about is that simply just breaking up the company would do little if the other people that would build the technology are still at the company and in fact could just reproduce their, the functionality themselves, right? So other remedies, for example, the German Competition Authority has, one of the concerns around competition restricts Facebook from sharing data collected between, say, WhatsApp and their products like Instagram or the Facebook Messenger app. They also restrict the tracking of information from kind of the web, Facebook like buttons and others, from being shared with the other apps. So remedies could be injunctions on behavior. We talked about it in light of the Facebook data privacy settlement that was announced a week or two ago. But there's a lot of overlap in terms of what remedies could be brought forth.
Meantime, Kurt, the DOJ has opened an antitrust investigation broadly into big tech. Do we know yet or have any indication of what this means for Facebook specifically?
I don't think we know specifically, but I think if you look at the digital ad market, that seems to me to be the most likely area where Facebook might be brought into this, right? I mean, you look at Facebook and Google and the amount of the digital ad market that they control and just their size and their scale. If there was one kind of industry area where they are dominant or could be perceived as dominant, I think it's going to be digital advertising. So I imagine that will be kind of where they get roped into this.
All right, Bloomberg's Kurt Wagner and Ashkan Soltani, former CTO of the US FTC. Thank you both. Coming up, Peter Thiel targets China, why the billionaire tech investor went from praising China's rise to trumpeting the president's trade war. That is next. And Bloomberg Technology live streaming on Twitter. You can check us out at Technology and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. The Pentagon's new chief says he will look into its controversial cloud contract. Incoming Defense Secretary Mark Esper has ordered a review after President Trump endorsed criticism that Amazon is being given an unfair advantage. The contract is valued at as much as $10 billion. President Trump expressed frustration at the process after hearing complaints from the #2 contender Microsoft, as well as Oracle, which was eliminated from the competition earlier this year. And billionaire tech investor Peter Thiel has been celebrated and shunned for his contrarian views, from his early bet on PayPal when few trusted using their finances online to his early embrace of Donald Trump when his Silicon Valley peers were mostly in favor of Hillary Clinton. Now there's China, which Thiel once viewed as an economic wonder, but now he's stoking anti-Chinese sentiment and cheering on President Trump's trade war. Joining us to discuss, Bloomberg Tech's Lizette Chapman, who's covering the story for us. And I remember doing an interview with Peter Thiel where he was praising the accomplishments of the Chinese technology industry. How did we get to this?
Yes, that's right. It has been an evolution. And like you said, he was one of the first to recognize the huge economic power that China has unleashed over the past decade. He looked at doing a number of investments there. He'd been investigating it for a while. But after we dug in and took a look at some of his holdings, we found that he'd actually only placed bets on 3 Chinese based technology startups.
So is this a sort of long developing theory, perhaps?
Well, you could say that. You could also, some could also say that he missed out on all the major bets that a lot of his, colleagues in other venture capital firms like DST Global and Sequoia China did extremely well and made huge returns on Xiaomi and JD.com and Alibaba for that matter. So depending on your point of view, it could be either, sour grapes because he missed out on all these great deals, or it could be a serious look at what he considers a brewing Cold War between the two countries around technological edges.
Now, after Thiel made those controversial comments about Google, which, to remind our viewers, he said Google was doing seemingly treasonous work in China, openly questioned whether they'd been infiltrated by foreign spies, the president praised those remarks and even said the administration would look into Google's work. President Trump calling him in a tweet as a great and brilliant guy. How does Thiel's relationship with the president impact Silicon Valley, impact U.S. companies?
Right. Well, he definitely has Trump's ear. He's installed a number of his former co-workers, including Michael Kratsius, and in the top positions in the Trump administration. So those ties definitely don't hurt. He's also made some huge bets on companies, including Palantir Technologies, which I know we've talked about before, and Anduril, which of course is Oculus founder Palmer Luckey's VR digital surveillance company, and also SpaceX, and all of those have large contracts with the U.S. government. Whether they are larger because of Trump and Thiel's relationship or not, is anyone's opinion.
And Palantir is basically a data intelligence sort of consulting firm that works very closely with the U.S. government. And Anduril has technology that could be used to track traffic across the U.S.-Mexico border. Tell us about.
Correct. And both of them do have, like SpaceX, do have large contracts with various branches across the government and the Department of Defense. And as they have evolved and their technology has evolved, those contracts have also gotten larger. At the same time, Thiel's influence has also gotten larger within the Trump administration, with Kratsius being finally confirmed as the CTO just a few hours ago.
And, just a reminder that Thiel is on the board of Facebook.
Correct.
Of which, Google is a huge competitor to Facebook. But you wonder if he has any influence on the president when it comes to these antitrust investigations, lawmaker scrutiny of big tech companies, which always includes Facebook and Google.
That's a great question. What we do know is that shortly after Peter Thiel made these unsubstantiated claims about Google possibly being infiltrated by Chinese spies, Trump did tweet that out and urge an investigation, which came forth the following day with a statement from the White House saying that they had found no evidence. Whether there's another story, a follow-up story after that, is to be seen.
Treasury Secretary Stephen Mnuchin echoed that statement from the White House. Okay, yes. Bloomberg's Lizette Chapman, thank you so much. Yeah. Great in-depth story out by you about Peter Thiel today.
Thank you.
Finally this hour, you may think of diamonds as a girl's best friend, but what you may not know is they're also considered the computer chip's best friend, a viable and even superior alternative to silicon. And in Silicon Valley, they're being used to fuel advances in 5G, satellites, quantum computing. I recently visited a lab that grows diamonds and learned how they're made, what they're for, and of course, tried a few on.
It sparkles, it shines, and it's one of a kind. But this diamond isn't the product of Mother Nature. Instead, it comes from a lab in a process that's shaking up the $80 billion diamond industry.
How long does it take from start to finish to grow a 2-carat diamond?
It takes a couple of weeks and then a couple more weeks to finish it into a polished gemstone.
Lab-grown diamonds have the same physical characteristics and chemical makeup as mined stones, without the controversy of their origins.
You start with this foundational piece, and once it's in the reactor, carbon atoms start to come down one at a time and connect to the lattice of the diamond below it, and atom by atom, you're growing diamond. So all of the reactors we created in-house, not just built, but actually designed in-house. That's where kind of all the magic happens.
Martin Reisheisen and his team at Diamond Foundry in South San Francisco have been making these precious gems since 2015.
Our founding team previously worked on solar power technology, and we recognized that the sets of technology we use can also be applied to grow diamond of very high quality in ways that previously were impossible.
But they aren't the only ones. There's new diamond technology in St. Petersburg, two-way technologies in Singapore, and even a name in the centuries-old natural diamond business. De Beers is getting in on the act. In 2018, it launched a lab-grown fashion jewelry retailer called Lightbox Jewelry, targeting younger consumers with its lab diamonds and selling them for about $800 a carat. That's a fifth of the price of other man-made stones and 1/10 the cost of buying a similar natural gem, though questions remain how well man-made diamonds will hold their value.
De Beers will probably produce 35 million carats of natural diamonds this year. I think you look at the global output of man-made diamonds produced for jewelry, it's probably 5 million carats, but it was well under 1 million carats just a few years back.
Last year, a major win for producers of man-made diamonds when the U.S. Federal Trade Commission amended its jewelry guidelines, clarifying a diamond is a diamond, regardless of its origins. Currently, man-made diamonds account for just 1% of the $14 billion global rough diamond market. That number is expected to grow to 7.5% by as early as 2020. Much of that growth is in the luxury jewelry market, but the real money opportunity is to use what they've developed in this lab to fuel the future of Silicon Valley.
We're now on a path to develop the first diamond wafer, and that's going to enable a lot of technological applications for power electronics, 5G networks, satellites.
These applications, go anywhere from quantum computing to high-tech laser and optic equipment, but I think we're probably still a good 10 years away.
Ultimately, diamonds are forever, but consumers now have a choice, and the prospect of them enabling advances in technology of the future is bright.
Coming up, YouTube taking serious measures to secure its children's channel, but the changes have content creators scrambling. Will YouTube be able to fine-tune its kids' content? We will discuss next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Earlier in the show, we spoke about the U.S. Federal Trade Commission's continued antitrust probe into Facebook. But that isn't the only big tech company the FTC is going after. YouTube has been in the crosshairs of an investigation over violating the Children's Online Privacy Protection Act. We've reported YouTube settled with the FTC, but a settlement has yet to be officially announced. In early July, YouTube made a significant change, however, to its software to boost what it deems quote-unquote quality children's content. But as the video streaming site tries to convince parents and regulators that service is safe for kids, some show creators feel they've been left scrambling. Content creators noting a drop in traffic after the company unveiled recent software updates aimed at boosting that quality content. For more, I want to bring in Bloomberg's Mark Bergen, who covers YouTube for us. So what are the changes that YouTube made?
Yeah, as far as we can tell, the company said that they tweaked their software a few weeks ago to now promote more quality family content. They've been talking a lot more in their earnings call even, and certainly on stage about YouTube as an educational tool. This is the pushback by a lot of criticism that it's not actually an educational tool, it's an addiction tool, that it shows harmful and sometimes dangerous content to children. So my sense is that they're trying to identify the traits of what makes an educational video and then surfacing that more to children.
So, what are the problems that remain? Obviously, content creators aren't happy about this.
Yeah, it's not like a slate of programming on television where it's okay. We know we have the 8 o'clock time, right? They make these algorithmic tweaks. They often don't talk about it, and then you have people who built their entire livelihoods. They have YouTube channels. They make ad money from that, and then the rug falls underneath them, and the floor down, and they lose this traffic, and there's no explanation.
But are they being deprioritized because their content isn't quality, or their
yeah, I mean, certainly, I've talked to people that said, like,
harmful for kids?
They're like, I put out educational content, right, and I don't see any reason why I'm being punished by someone else. Some of the most popular channels on YouTube, not even just for kids, but on YouTube, are these nursery rhyme channels that we don't really know who's behind them. The producers haven't really come public. There's not necessarily sort of an educational, a clear curriculum or purpose of programming.
Now, talk to us about what we know about what's going on with the FTC. We've had a few commissioners on the show in light of the settlement with Facebook. I've tried many times to get them to give us some details on the status of the settlement with YouTube, and I've gotten no answers.
Yeah, we don't know that much. What we can, so the tea leaves show, right, there was earlier this year, the FTC for the large level fine against Musical.ly, which is now TikTok, an incredibly popular video app. I think you can see a similar trend where they're looking at YouTube. YouTube comes out and says we have terms of service. No one under 13 is using our site without their parents watching. There's no way for them to.
That is just simply untrue.
Right, I think this is the argument they're having with the FTC.
Any parent can tell you that.
And the issue is then what do you label as children's content, right? Is a nursery rhyme, sure, but then a video game of Fortnite, Logan Paul, PewDiePie, some of YouTube's biggest stars are very popular with youth. So like anecdotally, and there's certainly Pew Research put out a report about just how dominant children's content, but there's a lot of definitional debates that the FTC is probably having with the company right now.
So how does YouTube walk this line between wanting to appease the creators who help drive traffic on YouTube, pleasing regulators, continuing to make money, and also cleaning up? Obviously PewDiePie, despite the fact that he's really popular, has really crossed lines sometimes.
Yeah, and he's just one. I mean, YouTube is, they're not dependent on one creator, for better or worse. They have thousands, if PewDiePie left, certainly that would damage them, but, or if some of their biggest nursery rhyme channels dropped off, the company would still be fine. I mean, we would love to have Susan Wojcicki, the CEO, come and address these. These are incredibly complicated issues that YouTube has been wrestling with for years. With children, it's even more complicated. I think the executives have talked a lot about putting a lot of effort into their kids app, and that's where they've created this safe playground, relatively safe playground. The issue there, and we've reported on this before, parents don't know about it. Children over the age of 7 don't want to be there because it's largely for preschoolers and toddlers. So that's, they haven't kind of announced a fix for that yet.
All right, Bloomberg Tech's Mark Bergen, great additional reporting from you on YouTube. Thanks. Well, Mackenzie Bezos is officially Amazon's second largest shareholder. According to regulatory filings detailing ex-husband's Jeff Bezos' stock sales, about 19.7 million shares are now registered in her name. Her 4% stake in the company is worth about $37 billion, making her the 4th richest woman in the world and 23rd overall on the Bloomberg Billionaires Index. Meantime, the same filing shows Jeff Bezos sold over $1.8 billion worth of Amazon shares in the last 3 days of July, his largest stock sale to date. Joining us from Seattle to discuss, Bloomberg's Matt Day. Matt, do we know anything about why he sold those shares?
Not a whole lot. He said, I think it was a few years ago now, that he's been selling off his stake in Amazon primarily to fund Blue Origin, his space company that's working on reusable rockets at this point, eventually planning to get to the moon. That's a very expensive proposition, so until recently it was about a $1 billion a year pace. Obviously he's upped that a bit with a $1.8 billion stock sale here.
So does this impact Amazon or Bezos' control of Amazon?
It doesn't. Unlike some of the sort of newer generation of tech giants, he never had a total control over the company or the board. He had, prior to his divorce, 16% of the voting shares. That's unchanged by the divorce. And Mackenzie took 4% ownership, but Jeff Bezos retained the full voting stake for that 16%. But that said, it's still his company. He might not be able to vote the entire stake, or a controlling stake rather, but he's got pretty much full faith of investors and the board, it seems.
So of course there's his space efforts, also some philanthropic efforts. I mean, where does the money go?
Well, for Jeff Bezos, he's certainly got a philanthropic arm as well. He announced he's going to spend a couple of $2 billion on a couple of issues, homelessness and education. That's still sort of to be seen where that goes. He's got some initial donations, but in contrast, Mackenzie Bezos has said that she plans to take the giving pledge and to give a giant chunk of her emerging fortune to charity under that the Gates Buffett scheme.
We haven't heard much from Mackenzie Bezos. What have we heard?
We haven't heard a lot, and she's cut a really low profile, like both here in Seattle and nationally. She's an author. She was involved in an anti-bullying nonprofit for a while. So I think there's a lot of questions about what exactly she does when she speaks up and decides to exercise her fortune, or what charity she might put it toward.
That said, it almost feels like we're hearing more from Jeff Bezos himself. He's doing more media interviews, more on the conference circuit, out and about, more in public. Do we know why that is?
I think part of that is just the surface area of Amazon, right? They made a big push into Hollywood in recent years with the studios business. They've got just surface area all over the place. Jeff Bezos personally purchased the Washington Post, so unlike kind of the early years where he could kind of hide out in Seattle if he wanted to, there's just so much that both the company's involved in, and he's got a personal stake in it, right? He wants to go to the moon and beat Elon Musk to various outer space milestones. He owns one of the most influential papers in the U.S. There's just not a whole lot of hiding, and it seems that his profile reflects that recently.
All right, Bloomberg's Matt Day, thanks so much for that update. Coming up, 3 days of declines for the Philadelphia Stock Exchange Semiconductor Index. We're going to look at how a slew of chips earnings are affecting the market next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Cloudera shares rose almost 13% in after-hours trading after billionaire Carl Icahn disclosed an active 12.6% stake in the company. Icahn said he intends to seek talks with company representatives to discuss value and board positions. He also plans to have discussions with other shareholders to understand their perspectives and is considering all options with regards to the investment, quote unquote. His stake is worth over $219 million. Shares of Qualcomm took a hit in trading Thursday, at one point down close to 7%. This as the chipmaker gave a disappointing fourth quarter sales forecast driven by weak smartphone demand. Joining us to discuss on the phone, we've got Stacey Raskin, senior analyst at Bernstein, who currently has a market perform rating on Qualcomm, and with us in the studio, Bloomberg Tech's Ian King, who covers the chip sector for us. So why were Qualcomm's results, Ian, so dismal?
Yeah, their explanation was, look, everybody's already shifting to 5G. Phone makers have given up on launches of new phones. Consumers don't want 4G phones anymore because they've heard about 5G. We're in for a pause until the end of the year. That's when everything kicks in and everything will be great again then.
Stacey, what's your take on, certainly various indicators, various trends, as Ian noted, pushing things in the wrong direction?
Yeah, so they pointed to a number of trends, and Ian was right. The guide was bad. It wasn't just bad, it was horrendous. It was by far the worst guide we've seen out of any company so far in an earnings season that's been pretty weak. They pointed to the pause in front of 5G. They also pointed to Huawei actually focusing on China and taking share in China. Huawei uses their own chips, so that takes share away from customers that might buy Qualcomm's chips. They pointed just to general weakness, especially in China, and an inventory correction that needs to happen. And like some of these are known. Like the fact that the smartphone market is weak is not a surprise. It's been weak for a while. The fact that Huawei's taking share is not new. So all of this is the dynamics have been clear. I would say the magnitude of what Qualcomm is showing versus those market dynamics, though, as well as some of their competitors like MediaTek, some of the other ones that have guided that haven't been nearly as bad. I'd say there's a definite discrepancy between what Qualcomm's showing and what the other indicators are. But the general trend is known. Things are weak. That is not a surprise.
Now, Ian, Qualcomm has been pushing their 5G innovations for a long time now, and yet 5G has been slow to come. On the call, it seems like they set a world record for simply mentioning 5G. Are investors buying it, Ian?
Yeah, I don't think investors are necessarily buying it, but they did give us some very concrete metrics. They were saying, for example, in China there's going to be 100,000 base stations deployed by the end of the year. And in general, they were saying, look, this is coming way faster than 4G did. We're not going to see the hold-up that 4G had, where you had these big, fat, ugly phones that nobody wanted to start off with. Everything's going to come in, and it's going to come fast.
Stacey, are you buying it?
Well, look, I think if you already owned the stock, and presumably if you owned it on that 5G story, I don't think you're selling it after yesterday, and I think the stock showed it. I mean, it was down today, but it wasn't really down any more than anything else in a weak tape. They're basically suggesting to everybody this is just an air pocket. It's a big one, but it's an air pocket, and the dream is still alive, and it will come back. And it seems like investors are there. I'm willing to say it may happen, and that's fine. But I mean, like if we're talking a year out, it's a long ways away. A lot can happen between now and then. You have the legal overhangs that are still there. I think there's enough risk to make me hesitant to dive in. I don't want to wait around for a year to see if it's real or not. And I still don't know how bad things can get between now and even the end of the calendar year as that air pocket plays out.
Now, Ian, Qualcomm had to cut off supplies to Huawei because of the U.S. blacklisting, then resume some supplies. What did they give us more detail on what they said about Huawei, what they said about the trade war?
Yeah, as Stacey mentioned, they said that the Huawei situation has had this kind of strange effect on particularly the China domestic market, because Huawei couldn't do much business in Europe anymore where it was using Qualcomm chips, so it concentrated on China, took a lot of market share in China where it uses its own chips. That hurt Qualcomm's other Chinese customers who lost market share to Huawei, and that created this situation. And then, of course, there's, as Stacey mentioned, there's the ongoing legal entanglements. They're not getting paid by Huawei anymore for the licensing.
Meantime, looking at the chip industry more broadly, Intel had strong results, though analysts weren't particularly excited by them. We did speak to Intel CEO Bob Swan. Take a listen to what he had to say.
Overall demand has slowed as our customers there have digested fairly significant purchases last year. And then secondly, we saw a bit of an acceleration of demand heading into the second half in the second quarter because the fears of the potential of additional tariffs being imposed. So those combination of factors have China, which is an important market for us, being a little bit slower this year than we had anticipated at the beginning of the year.
Stacey, what's your outlook on the chip industry in general, this as the president threatens to slap another 10% tariff on $300 billion more worth of Chinese imports and no end in sight for trade tensions?
Yeah, so we're fairly cautious on the sector as a whole. I've had a belief since early in the year that numbers, especially as we went into the back half, were likely too high and needed to come down. I mean, everybody was all the companies were talking about the potential for this big snapback, earlier in the year, like to come in the second half, and it's becoming increasingly clear that's not going to happen. The stocks, however, have continued to run, and the valuations are elevated. So, I mean, I would argue that, there's the idea of the snapback is priced in or getting priced in, but I think the prospect of actually achieving that snapback is diminishing by the day. I think this earnings season is kind of backed that up. This is probably like the third round of cuts we've had. We've had another round this time. Some of these cuts are fairly sizable, and I think numbers are coming down. And I know the stocks have been down a little bit the last couple of days, but in general, you look like year to date, they're still up very materially, and valuations are still very high. So we'll see where this goes, I guess, as we go through the rest of this quarter and see what impact, if any, this new round of tariffs, if they get applied, has on things.
So, Ian, what are the next big indicators you're watching?
Yeah, well, we're kind of through earnings season for this period, but we've got companies like Cisco, NVIDIA coming up with earnings releases where they're going to talk about where they are. So it kind of rolls on. But I think the longer term point that people like Stacey and a lot of his counterparts are concerned about is, by imposing by creating this trade tension with China, have we given a massive wake-up call to the Chinese electronics industry, to the Chinese semiconductor industry, to move away from dependence upon US products. Are they going to redouble their efforts to become independent or to increase their independence, and what long-term impacts does that have? I think that's what people are looking at, and the longer the trade drags on, the bigger a factor that becomes in people's minds.
And Stacey, what about you? What are the main things you're going to be watching for in terms of signals of which way the wind is going to blow for the next couple of years?
If the next couple of years, yeah. I mean, certainly the deterioration of the relationship with China is certainly one, and as Ian mentioned, I think the Chinese have been moving towards self-sufficiency for many years, but regardless of what happens, whether we get a trade deal or whether we don't get a trade deal, I think that move towards self-sufficiency has to be accelerated. I mean, there's no way that they can afford to be fully dependent on parts and IP that only the U.S. can provide. So I think that is going to progress regardless of what happens with the trade deal and regardless of who's sitting in the White House in 2 years. I think beyond that, we monitor the same things we always do. We monitor overall demand levels in end markets. We monitor inventory levels, noise in the supply chain. Like I said, right now those things don't look so hot. We'll see how things progress as we go through the year. We'll see what happens with the tariffs. We'll see if we get a deal or not. But in general, I would say, we're probably in for more, at least during this administration, we're probably in for more volatility on the news flow than we've had to worry about in the past.
All right, Stacey Rascon of Bernstein, Bloomberg's Ian King. Lots to watch, lots of things uncertain in the road ahead. Thank you. Still ahead, Zynga's mobile gaming business posted record revenue last quarter. How the company plans to sustain growth in the face of slowing smartphone demand. Next, this is Bloomberg. Zynga shares rose Thursday after the company posted second quarter earnings that beat analyst estimates. The game developer saw revenue jump 41% from a year earlier to $306 million with record sales from its mobile business. Zynga also boosted its full-year revenue guidance to $1.2 billion, citing strong momentum in live services. Joining us to discuss, Zynga CEO Frank Gibeau, and Frank, shares have been on a tear over the last year. What's driving that?
It's the strength in our live services. We have a collection of brands and franchises that are just reaching new record highs. It starts like Empires and Puzzles and Graham Games Merge Dragons, which we acquired in the last year. But in addition to that, our perennial franchises like CSR2 Racing and Zynga Poker had very good quarters. And Words with Friends, on its 10-year anniversary, which is this month, hit its best mobile record ever. And so it's really exciting to see those live service products really hit new highs. We also launched a new game. We launched our Game of Thrones casino product, which is off to a great start. And we announced 3 new games to enter test market with Farmville 3, Merge Magic, and Puzzle Combat.
Now, for many tech companies, the story is about the smartphone slump, and Zynga, obviously, thrives on the mobile platform. Does the smartphone slump impact Zynga, though? I mean, we all have a phone, but we're not perhaps upgrading as much as we used to.
It's not as tight as it used to be. It used to be handset sales were directly correlated to the volume inside gaming. But what you see now is a big jump in engagement. People are playing more games, they're playing them longer. And so that has offset any dampening that you've seen in terms of it's now a replacement business basically in the West. But I would point out that there is still great growth happening in Asia and emerging markets where you have very high performance handsets. They're very inexpensive. And we're starting to see game audiences appear in markets we've never seen before, like India, Nigeria, the Middle East, that are really finding our brands appealing.
Now, I know I asked you this when it was earlier days, but do you know more about what Apple's game streaming platform, Apple Arcade, what that will mean for you?
I think that it's going to be interesting in terms of how it rolls out from the standpoint that there's 2.4 billion mobile gamers in the world right now. And it's such a vast market that there's so many choices available to people that mobile's, when you look at Apple's service, it's not very complementary to what we do. I mean, it really goes against some of the things that we're trying to put out there. But if
How
you,
so?
Well, if you look at the way that it's merchandised, the way that it's positioned, it could be an interesting kind of new dynamic in the marketplace. But overall, we feel very confident that original IP like Words with Friends, CSR Racing, Empires and Puzzles, which won't be available inside the service, will stand on their own and have their own audiences.
So what should we be watching for in the gaming space in the second half of the year? What is the future of?
Well, I think in the next several years, you've got a few dynamics that are really interesting. The consoles are going to transition to new hardware next Christmas. You've got 5G infrastructure coming, which will create really high-performance games for mobile, new infrastructure opportunities from a distribution standpoint. Streaming is starting to fuse into the marketplace and becoming a technology that people are using more and more. And then also, what's really interesting is cross-platform play. You're seeing people on PlayStations play with PCs, play with mobile games, like what you see with Fortnite. And that's going to be something that's going to drive long-term growth inside of the overall gaming business.
All right, good stuff. Zynga CEO Frank Chabot, thank you as always for stopping by.
Thank you.
Good to have you back. And that does it for this edition of Bloomberg Technology. Remember, we're live streaming on Twitter. Check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.